Okay, good morning, everyone. Welcome to this panel entitled, What's Next for Microfinance? / the view from the founders. As many of you probably have been working in microfinance for some time, you will have a certain sense of déjà vu because it would seem that every 5 years or so, conferences on microfinance have this introspective trend and see, are we really on the right track? Is there a future for microfinance or not? And obviously, the elephant in the room here is technology, and we're asking the question, what's next for microfinance? Because there is some diffuse perception of technology changing possibly the rules of the game in microfinance. So, the founders. Founders are people who have some 25, 30 years ago changed the rules of the game in microfinance at that time. So the idea is that if we have them talk to us about their expectations then and how it has played out subsequently, their achievements, what they perceive as achievements and challenges, that will give us some entry points on how to see technology not necessarily as a threat, but as a new field of application for microfinance. As a philosopher once said, if you don't learn from history, then you're condemned to repeat it. Now, microfinance has had already so many crises, has gone through growth phases and transformation phases. There have been various buzzwords which you will hear this morning. I'm not going to mention them already. There will be so many buzzwords in future. We just have to keep a sober assessment of what the opportunities are. The current situation, 2018, we have very encouraging figures from the Findex about financial inclusion. 63% of the population in low-income countries have access, formal access, so that's a lot, 63%. At the same time, many of these more modern technology-based connections are apparently dormant, so they're not really being used. So maybe there's something a little bit tricky. At the same time, we see, though the practitioners amongst you know that, we see that there is still a huge demand for small, uncollateralized, affordable, convenient financial services for all kinds. So obviously, there is still something to do, and we're not going to run out of business next year or so. So let me just, without further ado, present the panelists. We will then go through a few questions. We already got warmed up and had a heated debate over coffee this morning. And then we will allow for some 15 minutes, 20 minutes questions from the floor. So right next to me is, in fact, I don't need to introduce to most of you, the panelist, is Esma. She is the founder of Enda Arab, which was transformed a few years ago into Enda Tamwell. And it is within the MENA region, probably the largest, or if not one of the largest microfinance institutions, with a number of interesting special programs on youth entrepreneurship, women programs. You have started something apparently also on digital clients, etc. Then Carmen Carmen Velasco, who is the co-founder of Pro Mujer in Bolivia and was instrumental in replicating the model of Pro Mujer elsewhere in Latin America. Again, Pro Mujer with a very strong focus on including the poorest of the poor at a time when people didn't talk about financial inclusion yet. She has been on the board of the Social Performance Task Force and has also been very active in the Microcredit Summit campaign a couple of years ago. Now, there is a practitioner who unfortunately could not join us. That's Godwin, I can't get his family name, but Godwin, the CEO of LAPO, a microfinance institution in Nigeria. He had a problem getting his visa in time, and he excused himself, and one founder less. So, but we have, from the theory, from the analysis side, Hans-Dieter Siebel, who is for many years, you all know him from the University of Cologne, director of the Institute of Research on Development, and an expert on various forms of informal, semi-formal finance, has a very strong interest in savings and in cooperatives. And above all, he has a very strong interest or hobby in history. So already this morning, he went back 2,000 years in microfinance history. So probably will be able to finish by midday or so. So, after this introduction, just let me ask the first question. When you look back over, let's say, the last 25, 30 years or so, and when you started off, and you take stock of what has been achieved now, is there something that really strikes you as a very big disappointment, something that really, you think we shouldn't have gotten here?
I start.
If you may, yes.
Regulation. I think microfinance could have been better off if we don't have regulators. Because I believe microfinance, or whatever, financial inclusion, is a dream. And dreamers should not be confined with regulation. Because when we started, we were not politicians. We didn't have a political objective. It was just care for human beings who were excluded from at that time, from the government programs, especially women. And I think all founders were dreamers. This is how we, and I believe for me, it was regulation because since the last 25 years or so, we still are fighting with regulators because we are still dreaming and we want microfinance to do more for women, youth. And unfortunately, as in Tunisia, it took us 23 years to make the regulator believe in microfinance first. Today, it's recognized, but we are still microcredit. They still don't believe that MFIs can take deposit. So there is a problem of trust. Even after 25 years or 30 years of successes, the regulator don't believe in you. And this, for me, this is the major disappointment.
And it's a particularity of the MENA region
Exactly.
where MFIs are not allowed, and that is not going to change in the near future.
Exactly.
It's not allowed to take deposits from the general public. And that has all kinds of implications on sustainability and outreach and whatnot. So it is a little bit geographically contained, perhaps, that disappointment, but maybe, Carmen, you have a different disappointment.
Yes, I totally agree with Asma that regulation has been a big issue and it has stopped the capability that the NGOs had in order to innovate, to create, to be disruptive. But I'm just thinking, Asma, that one of the disappointments that I had is that because microfinance showed that it could become big, it was something that went out of our hands. It grew so much in terms of potential, in terms of services, in terms of people being part of microfinance, and it showed they could make a lot of money. I think then regulation played a role. And I think that regulation played a role because of commercialization. We have been pushed. I remember being asked by donors, Siebel, how is your operational sustainability? How is your financial sustainability? And they began to ask, how is your profitability? I said, I'm not going to answer that question if you don't ask me how sustainable are the business of our clients. And no one was making that question. But all of a sudden, a lot of donors became investors, or new investors came into the arena, and they wanted to invest. And that's why regulators come. So I think one of my biggest disappointments is that flow from being a not-for-profit entity, they become to be for-profit entities, but profit maximizing in order to give the profits to the investors. So the social component with which we began, we didn't have a clue that this was going to happen in terms of success and profitability. The mission, the social mission began to change, or it began to be used as something like justifying the profitability. You have to be very profitable in order to serve more people. Was that the case?
I don't know, maybe one could also look at it dialectically. If the push, let's say, in the early 1990s also hadn't been for a certain professionalism, transforming these little well-meaning NGOs that are doing all sorts of kind of other things into specialized financial intermediaries that respect at least rudimentary, probably wouldn't be where we are now. I mean, I see the damage that the excessive commercialization has done, but it has helped us also steer the whole movement a little bit more in the middle ground, and then also look at the sustainability of institutions to be able to continue serving the poor.
Absolutely.
But Hans, you're not a founder, but you're probably a prophet.
A backwards-looking prophet.
A backward-looking
and forward.
No, a history-minded. So, I mean, I know that you have very strong feelings about all kinds of different traditional forms of financial intermediation. I could imagine that you are probably a little bit worried about them being swamped under by commercial approaches and MFIs or banks that are pushing them aside. Is that something that has...
Well, my immediate response to your question, what about my major disappointment, is that I cannot be disappointed. There's one exception that I will come to. Now, my experience with the foundations of the field go back to the early 60s, actually. And I have worked on, and I've been involved in, not just academically, more than that, I would say in a number of cases as a founder. I've been involved in financial self-help groups, which is kind of the bottom of the system of the overall, what we call microfinance system. I've been involved in microcredit institutions, microfinance institutions, which are different. They are financial intermediaries collecting savings and providing credit. They may be self-reliant, as a matter of fact, and there are lots of them now, which have emerged over the last few decades. And then agricultural banks as providers, but particularly the field of agricultural development, bank reform, and commercial banks. There are major commercial banks involved in the field. And just a few words about my experience in 1963.
Disappointment, not experience, disappointment.
Well, okay, then I'll jump over that issue. I hope I will have the opportunity of coming back to that. Now, in all these fields, I said I cannot be disappointed. There is a major exception here, and that is government interference. Whenever government starts to interfere, and I'm not talking about regulation. Regulation is the business of the central bank, and that is not the government. Whenever the government interferes with central banks and interferes with this financial self-help groups, with microfinance institutions, with commercial banks, with agricultural banks, it's perhaps the worst case actually, then terrible things happen and the clock is turned backwards. And how to get that to get that controlled, that is a challenging thing time and again, and there is no final solution to that. And that keeps disappointing me whenever I run across it. And okay.
Good. No, I mean, that's very interesting. We have sort of different perspective, sometimes driven by particularities in a region. Can there be microfinance as a practice without microfinance institutions? Let's assume that's a scenario, MFIs will disappear, nobody likes to label them as microfinance institutions any longer, but there are all kinds of institutions that do, as a practice, microfinance. Is that a possible scenario? Is that a desirable scenario?
I think that what is the bottom line? Is what you're offering, or is it the demand? Who should be ruling what's been done? The new chic words and options, financial inclusion, microcredit, microloans, self-help groups, or whatever? Or should it be from down to up? And when you ask, is microfinance still is going to be fashionable? Is financial inclusion being fashionable? FinTech? Who cares? The need is there. And if you pay attention to what they need, what it's shaped is going to be according to their needs and the reality of the ones that need this venue to overcome the exclusion in which they live. I think it should be the rule of thumb. And unfortunately, I have seen in Latin America that the trends, the gurus put words in the environment, and everybody's running towards that new methodology, new invention, and they kind of forget what is really needed in terms, why? Because they are not making sure that they are serving the very poor, they are not sure what the very poor needs, and most importantly, what are the outcomes at the level of the population, and I love what you mentioned, the families, women, men, children, the community, what's happening to them? If you don't follow up that, all this ceiling of new technologies, new approaches, new whatever, are meaningless.
Yeah, same thing. Unfortunately, as long as we have poor people in the world, on this planet, we will still need microfinance. Call it whatever you want. It doesn't matter. Microfinance, microcredit, financial inclusion, I don't know what else, because consultants will come up with a different name for the same thing. But there is one thing I know, one thing. that poor people need money. And they need money as all of us. If we want the poor people to prosper, to work, to become autonomous, the only way is to provide them with capital. And as long as banks are not interested in the poor, unless they are going to change, I think we will still need institutions like us who will provide the poor with finance. But more than that, my experience over the past 20-something years is that now we are coming to the next generation. Now we are working with the children of our clients. So even our clients, I think because they got into capitalism, let's say it, and they have children today who want to become entrepreneurs, and they need money. And unfortunately, these children cannot go to the bank. The same problem, they don't have collateral. So I think we will need microfinance. Is it going to be given through a telephone or in a direct contact with human beings? Of course, we can do both, because we can use technology, and we are using technology, and I think poor people like technology, but they still like the human touch. And I think from our experience, both of us, especially with women, they need to come and talk and chat and ask questions, because according to me, microfinance is not just about money. It's more than money. It's the human touch. It's the piece of advice you give them.
Client-centeredness. That's the buzzword.
No. It's not client-centeredness. What Asma has said, it's not the touch that they need. We're talking about poor people. We're not talking the ones that can walk into a bank or a teller. No, we're talking about people that live out in the community that they live very difficult conditions. One of the things that Asma said, it's the human touch. It's not with the loan officer. One of the things that I found, and every time I go back, it surprises me, how the client members love their group. And someone said, village banking is going to die. Well, we had an announced death 20 years ago, and we're still alive. Maybe we're mummies, but we're still there. Why? Because the client need the social support, the social linkages. When I ask the audience, how do you face better a problem? Alone or with someone talking about it? And I would doubt more than 2 or 3 are going to say, I prefer to deal it alone. This population, they have such an amount of exclusions that the group becomes, as Asma said, it's much more about, it's not only money, it's bigger than that. And to have that client center, I don't care about the institution, I care about the client, the people. I hate to call them clients. They are human beings that need that kind of self-help support, that they feel that I can talk to you about my husband drinking, or my son or my daughter, whatever, and that is the real inclusion. It's not being able to go to a bank or have a bank account. I am included as a human being. Then you could talk about sustainable goals.
In fact, that's why I don't think we should talk of financial inclusion, because what the poor are getting from microfinance is more than financial. It's social inclusion.
Exactly.
It's digital inclusion today. And it can also be tomorrow, I hope, political inclusion, because these people are excluded. In our countries, women are totally excluded from politics. So I believe because of microfinance, they will be included socially, digitally, and hopefully politically.
Well, I don't worry much about terminology. In 1990, attending the Boulder course, I coined the term microfinance. What happened was I took a one-week course by Bob Vogel on the importance of savings, which were kind of non-existent in that microcredit field of microcredit. And yes, coming from Germany with a tradition of savings banks, 200 years, with a tradition of cooperative banks, 170 years. I mean, it was inconceivable to me to have sustainable institutions with a wide outreach that serve the population, that are not that don't mobilize their own resources, and most importantly, that don't provide the deposit services for the population. Everyone, not just the poor and the ultra poor, for everyone. These are the financial institutions. So then microfinance spread as a term, particularly when SIGAB was created. And then eventually, in 2004, we attended a conference in Geneva. Financial inclusion came up. And yes, I really like the term, because the problem of microcredit and many microfinance institutions has been that it's not about financial inclusion, it's very much about financial exclusion. It excludes men, it excludes the non-poor, it excludes small and medium enterprises, and the big needs that I see is small and medium enterprise finance, finance for men and women, and finance to families. I mean, we don't live as men or as women, we live in families. And the arrangements in the family of who does what, cooperating or not cooperating, vary so widely. So, okay, financial inclusion is fine with me, but my main point is the action that follows.
Can I react to his
Yes,
exclusion?
no. You hit each other if you want.
I agree
If you want to
with
read up on this, financial systems development and microfinance, that means putting microfinance into the context of financial systems, which includes regulation, actually. Without that, there is no real future. And if you send me an email, I'll send you the link, then you can have it electronically, because I have only 2 copies left.
Okay.
1996, actually, is the publication date.
So it's just about exclusion. I agree with you. I used to be a feminist when I started microfinance. And because of one donor who asked us, you have to work only with women. So we started working with women. And then one day, I asked the women, men are asking for loans. What do you think? This institution is yours, but what do you think? Shall we open it for men? And they all said, yes, of course. I said, why? And they said, because we want our men to work. Because I don't know if you know about Arab countries. I'm sorry for men, huh? I will be tough. But we have thousands of cafes everywhere, especially in the poor areas, and these cafes are full of men, no women. And men are drinking coffee, tea, playing cards, smoking shisha, and women are working very, very hard. So women are clever and said, no, please don't exclude them. Give them loans. And we started giving loans to women. Of course, donors come back to us today and say, oh, be careful. Your gender is changing. You are giving more loans to men. So I think I agree with you. We should not exclude men. It's the opposite. We should include everybody.
Thank you.
And I agree with your concept of the family inclusion. Because as I said today, I've seen during my experience women starting businesses for their children, for their husbands, and I liked it. And at the end, finally, we are contributing somewhere to the family, well-being. Because if you have businesses run by the family, you can start family loans. So I think let's talk about inclusion, not in terms of gender, of women and men, poor and not poor. I believe that, as I said, money is important and we should include people in the economy. And unfortunately, the only way is to give them loans or savings, to offer them financial services as we all need. This is my...
If I could just perhaps prolong the trajectory of your point. You remember about 25, 30 years ago, people were just talking about alleviating,
Alleviating
alleviating
poverty.
poverty. Yeah? Okay, that was the big thing. That was our dogma, and we all subscribed to that. And there was no question. We're talking now, after X crises and transformations and whatnot. We're not talking about inclusion. And rightly say, there are different dimensions to inclusion, including social and political, whatnot. I would like to link that now to the Sustainable Development Goals, because that, to me, is a very practical, convenient framework to give a certain direction to the development of the industry, i.e., link the provision of financial services to non-financial benefits, non-financial goals of various sorts. And as it happens, and that's in the nature of finance, the consumer of a financial service has the sovereign choice to say, okay, it's going to go towards housing, or it's going to go towards education, or something else. 2030, we're going to be around here in Luxembourg? Because in connection with, will we have a conference in 2030 on how we helped, contributed to attain the Sustainable Development Goals?
We will not be here, by the way. I will not be here.
That's what I was going to say. But Bern, if we are not here, because by 2030, all the UN objectives would have been attained, then I will be able to die in peace.
Yeah.
And all, okay? But we know that that's not the case. And of course, the microfinance inclusion, socioeconomic inclusion, or whatever you want to do it, it's going to be around because they are going to be more empowered. The population that needs to be excluded needs to be included. They are going to be more empowered. So my hope is that the players are not going to be top-down, but with what you mentioned about the self-help groups, the movement that's having with the self-help groups, it's humongous. And they are going to be able to be more independent from the banking system with the technology. They're going to be able to lend them their money and have a more safe way to save and to give loans with their savings and not being charged the amount of interest rates that they're being charged now. And I think that we can dream, but I think we could dream in a way that the UN goals are going to be thrown to really to achieve them if the population, I don't remember the number of people that are living excluded, but not financially excluded, period, get a more active role, and they take the development, their own well-being into their hands. I think that the attitude in Latin America of the governments that are giving bonuses in Argentina, for instance, we have seen 3 generations of people that have not worked for 3 generations because the money that is being given by the government in order for them to vote for them. So I think that we can't forget that one of the things that is excluding and it's killing people is corruption. And if we don't take into account that corruption is one of the key components of poverty, of exclusion, we wouldn't be walking. So if those things are not taken into account to get to 2030 and to go beyond that, we're going to have big problems.
I mean, we're talking about death, corruption. I mean, this is taking a very
serious, negative.
pessimistic turn, this whole conversation. So,
Can I
luckily,
say something too?
yes, something positive, hopefully.
Well, the SDGs are really not my field. But your question is, what about 1930? My prediction, careful with that, but my prediction would be that the financial world is becoming a lot more complex. And let me just give you two examples. One is the Isuzu, which I discovered among Nigerian factory workers in 1963. Dug into the literature, found out the Isuzu dates back to the 16th century and was part of the social capital that the slave trade, the Yoruba in particular, in southern Nigeria, brought to the Caribbean. Widespread in the Caribbean, also the terms Isuzu, Susu is still widespread. In recent decades, with the immigration to the North American cities, the Isuzu has been brought to North American cities. All over the American cities, the immigrants are creating these financial self-help groups. Dale Adams, by the way, is someone who has been collecting the papers. So this is actually the new frontier, the frontier of microfinance in North American cities based on a 600-year history in that particular case. On the other hand, we have commercial banks that have gone heavily into microfinance. Bank Rakyat Indonesia, established in 1895 as a microfinance institution. Of course, the term didn't exist back then. Today, this is a bank with $80 billion in Indonesia, with $80 billion in assets. The strongest part of this is their 5,500 micro banking units, which provide micro savings and micro credit, actually. The portfolio of these units just in one country, one instance in single bank is more than $18 billion in savings accumulated and $17.5 billion in loans outstanding. One institution. Other banks in Indonesia got inspired because of that competition, and they're doing the same thing now. So this is just two examples of what I would think will be there in 1930 to an extent.
2030.
2030, yes. I'm not that old. Okay, so the world is becoming more complex.
20th century.
And
Thank God
of
we live
course,
in.
digital money will be there. Digital linkages, on which I've worked recently, digital linkages between self-help groups and MNOs and banks will be there. Digital, and in particular, and I think perhaps one of my predictions will come true. Maybe. When I developed the approach, linking banks and self-help groups, I said there will be three stages. That was in the early 80s. Three stages. The one will be the banks lend to, not talking about savings now, it starts with savings, but the banks lend to the NGOs because they don't know the self-help groups. The NGOs lend to the self-help groups. The self-help groups lend to the members. Model one. Then, after confidence has been created, and that has happened actually in the pilot project that I established and ran and managed for so many years in Indonesia, the banks lend to the self-help groups directly because it cuts down on the transaction costs incurred by the NGOs. The NGOs are still involved as training institutions. And then the third stage, my prediction was direct access of the individuals to the banks. Now, that has happened actually, but to an extent that has not been monitored. And my hope and my prediction would be that particularly with digital finance, access of the individual to financial institutions, services will be universal. And they decide whether they just do it with their handset or with a group, which are not going under the groups, as you know. With all the banks, the groups have grown in numbers and strength. Or whether they do it with a bank and MNO, all that will be open. I think there will be a lot more choice, actually, than we have today.
Thanks for the positive optimism.
But I will take
But
you back to the
can
negative.
I ask you, because we had that conversation before, fintechs, will they replace MFIs? Question mark?
Not at all.
Not at all?
No.
Don't think so.
We will work together.
Exactly.
We will
They
they still need us,
Absolutely.
and we need technology.
People like institutions. And
Yes.
no amount of fintech will get me to cancel my account with the German cooperative bank.
But can I come back to the
Sure.
UN, because I really think that we should stop thinking that the UN will solve the problem.
Who said that?
I mean, SDGs 2030 and poverty on Earth, it's impossible. If the UN would have done something, they would have done it. They would have
Exactly.
ended conflicts on Earth and
Absolutely.
poverty. In 75 years, they haven't done it. So don't tell me in 30 years, not even 30.
That's
10
not-
years, they will end poverty on Earth? No. And
That's
that's
not-
why I believe that they still need people like us in this room,
Exactly.
people who keep dreaming that we will end poverty on Earth, and you will. I'm sorry, we are leaving.
But
so
Asma, to
you
your,
will do
to
it.
your, to your
Who
question.
is the UN? The
Exa-
UN is...
No, it's not us. No, sorry, it's not us.
Sorry, it's not.
The UN is governments, and we are not governments.
Absolutely.
We are people, and
Because
we are strong
Ben-
enough to end poverty if we believe in that.
What happened with the previous goals? They haven't been achieved. So they switched to another nomination.
Yeah, exactly. They have
Well,
to-
we're not going to talk about
About
this.
the
is
UN.
not a conversation about the Millennium Development Goals, the Sustainable Development Goals, the usefulness of the United Nations
But-
system.
but
But I'm talking here about a framework that could
Yes.
help set specific targets
Yeah.
in the areas, social service areas like housing, access to
Yeah.
water, access to clean energy, transport, education, and I don't know what, where you need financial services.
Yeah.
Exactly.
Primarily savings and some insurance
Abs-
and very little credit. So please don't hit on the UN.
No, no.
No, we just ignore it.
I mean,
They will give him an
fine,
award.
it's Friday morning.
I think if they play, I think if they have the power to convey civil society, not governments, but civil society, and bring them to the table
Yes.
and work with them and take into account. But in the other hand, I would challenge every single institution, not only financial institutions, not only banks, to put, and I love Cerise, I hope Cecile is here, but are you here, Cecile? She's not. We should give a round of applause to her because she has included in the SPI 4 a way to make a follow-up of the SDGs and to see who's contributing in order to achieve them. And if the UN doesn't take into account these huge efforts, they will be losing opportunities.
Okay, I mean, I would like to
Let me
close
just add,
this.
before
Close the
Put the
UN, yes.
parentheses of
Before
the
they
chapter.
were- before-
Gender.
Gender.
No.
Men and women.
What is
women and
gender,
men.
gender?
Before there were
Yeah, well, it's not
before there were SDGs in the 60s, the FAO had a program similar to what you may call SDGs. Poverty will be alleviated within 10 years.
Yeah. And
Okay,
it's-
I'll never again mention the Sustainable Development Goals. So
Don't mention it.
I was just trying to be helpful to... Okay, good. By the way, civil society is on board, and the commercial
should
sector
be.
is on board, and the private sector and multinationals they're all part of the... But anyway,
Absolutely.
so let's turn to something positive now. How about your biggest achievement? I mean, not your
Yeah.
personal biggest achievement. No, I should rephrase that. When you look back and you remember, how you started off as a founder, and then you saw this whole thing evolve and develop, Microcredit Summit campaign and CGAP. and client protection and smart campaign, all kinds of campaigns, all kinds of changing buzzwords. Despite all that, despite the service, what has been the biggest achievement, something that is really unique to microfinance as a field?
I can tell you from my point of view, as I said in the beginning, I was dreaming. And I was not dreaming of that success, that one day I will see in my country, an Arab Muslim country, where women were totally excluded and in-house. They were active, but never in the how do you call it? In the
Public sphere.
Public sphere. I've seen microfinance opening the doors to women. I have seen women growing, empowered, changing their lives, changing their, they have confidence, they talk. And I was really amazed myself as a woman by what I call the magic of microfinance. And that's why I believe that when the French say, l'argent ne fait pas le bonheur, they are not right. Money does make people happy. And it's happy in the sense that these women, they were dependent on their husbands, fathers, brothers, and now with microfinance, they have their own money. And for me, it's a revolution. I have seen that revolution during my lifetime, during my experience in Tunisia, because we were the first institution to introduce microfinance in Tunisia. And I have seen, we started with $20,000. I was not dreaming of that. I wasn't expecting to reach out to 770,000 people. Half of them are women. And today, I can tell you that it's magic. So I don't need people to come and tell me, microfinance, is it working or not? Because I can tell you, yes, it's working. And it's working mainly for women, but also for men. And today, I'm seeing something different, because after the so-called Arab Spring, or the revolution, unfortunately, even though during the revolution microfinance was hit, but we still, today, we are doubling our portfolio, doubling our recruitment. And today, I'm seeing a new group of people, youth, because unfortunately revolutions were made by youth in the Arab countries. And today, we are lucky that microfinance is a useful tool for youth employment. So microfinance is no longer about poverty, ending poverty, it's also contributing to employment. And I believe the only way for our countries, like Tunisia, 700,000 unemployed people, the only solution would be business, would be microfinance.
Yes.
Yes, and
You don't believe in that?
No, I don't like the only. It's one of
the.
I mean, when you talk about employment, we're not talking about the self-employed. We are talking about people who recruit other people into, full-time, reasonable.
No, I'm talking about self-employment also, because government have no more space for it.
Okay, but I mean, then we have to go back to our SMEs, the job-creating engine of the economy, where MFIs are, in some cases, I think you are as well, moving into that space.
SMEs, yes.
Sorry.
I think that when I go back when we began, the population that we were working with were receiving donated food or food for work, and there were sacks of food, rotten food, that they were receiving from the outside. I don't want to name the
World Food
country.
Program.
Exactly. So I thought it was so difficult to pull them out of that program, because that was keeping them behind. The husbands were expecting for them to bring that pile of food to be sold, not even to be eaten. So one of my biggest surprise, and I feel wonderful because of that, is that they were able to drop that program, even though some of them got beaten by their husbands and they were having very difficult times at their places. They decided to drop that and to begin their own business, to have they were so courageous to begin from scratch with a $50 loan. They were able to stand up. So one of the things that makes me feel like it was worth it is to see that hundreds of clients or women that have changed the face of their family and their community, that now their children are going to school, they have graduated, some of them are our clients, but some of them are at the university, and now they are professionals. So I see the impact that it has had, and when you say the Millennium Goals or whatever, it's not only giving the money, but what percolates in a global well-being of the community, of the families and the societies. That is one of the things that makes me feel that we have positive outcomes, that it's possible, that women's empowerment is extremely powerful, extremely powerful. We just can't believe the change that they have had in their lives and how their children are seeing a different mama. They're seeing like a brighter future because of the change they are seeing in their family. And as Asma said, in Latin America, it's not because of religion, but it's because of machismo. We need to do something, because since women were bearing children, or all the things that we know women do, besides that, they began to make money. So men said, let them work also, and I'm going to sit back and relax, and I'm not going to work anymore. But now there is a huge movement to say, okay, include men as part of this development. So I think that this is the missing part, that if we push harder in Latin America, that men should be included in the process of change, that will be like
So empowerment,
as global.
that's where we can make it big.
Exactly.
There it is. But Hans, you look skeptical.
Well, my biggest achievement,
Not your biggest achievement, the achievement
Just
of
let
the
me talk.
microfinance.
just let me talk. My biggest achievement, this is a term I don't like, and I don't think I can answer that. But what I can answer is what I consider my major contribution as a founder, and that is linkage banking. Linking banks and self-help groups, which goes back to my exposure decades before I did that with the self-help groups. And because they were still stuck in their own little circles all over the world, actually, I said, what they need, those members that are really investment opportunities, they need access to banks. So I designed this approach in the early 80s. I designed it for Africa. It did not take off in Africa. Then this was followed by feasibility studies in Asia. Apraka took this over, and then it became a major approach. The one country that has gone farthest in terms of monitoring, all these things happened in the late 80s and early into the 90s. And then 10 years of GTZ support and this and that, and then the monitoring, the external monitoring stops. India is different. Since 1992, it has been monitored by NABARD, annual publications. You can check it on the internet. And there are 9 million self-help groups linked to banks under that umbrella in India. 9 million savings linked and 5 million credit linked. Total number of members is 100 million. Multiply it by 5, then you have about 40% of the population of India that is being covered here. And the volume of loans outstanding is now 15 billion, and 6 billion of these loans outstanding of self-help groups to the members are internal savings of the groups. 9 billion are bank loans that go into the system. Now, I don't consider this a major achievement because I couldn't say like you, I'm happy with this and all of that. There are lots of things I'm unhappy with. The state governments are getting involved, and now there's this new competition now between the world of self-help groups that I am talking about, and then the world of savings groups in Africa and spreading all over the world that we are also talking about. This is branding. The NGOs need their own brand, and I think this is silly. I mean, whether this is a self-help group or a so-called savings group under NGO, the umbrella of NGO, this should really be a joint concern. And I think we can learn a lot from the positive and negative experiences that every type of these institutions has been made. There is no perfect world here, particularly when you have something as complex as self-help groups and financial institutions linking them. This is a fast evolving field. Now with digitization involving digital linkages, the MasterCard Foundation has been given me the opportunity, I'm very grateful for that, for doing a feasibility study of these digital linkages, actually, replacing the bucks, as we've learned yesterday, actually, replacing the bucks with digital money. So this is something I've only marginally involved in now, the digital linkages. I wish I could spend the next 10 or 20 years on that.
We will spend
I pass this on to others.
I guess we will spend at least the next 10 minutes on that, because I see in the audience a number of people who've made presentations on this, that, and the other linked to fintech, crowdfunding initiatives, etc. And it will be interesting just in a few seconds from now to hear your questions to the panelists on this whole issue of coexistence, peaceful coexistence between different sets or systems of financial intermediation in low-income countries. Before opening the conversation to the floor, I would like it's something that I'm more personally interested in, this whole question of impact investing. No, not the question of impact investing, the question of, is that a risk or an opportunity that impact investing has basically mimicked the tools and methods and metrics of microfinance, tested and invested in microfinance for determining social performance and outreach? Impact investing is something that in the financial world, at least in private banks, the president of the European Microfinance platform is here, I speak under her control, is something that will increase. And when you look at the portfolio of some of those impact investors, they are mostly in MFIs. I'm not talking about commercialization here. We are talking about basically a positive learning effect from a very conventional financial strategy, investment strategy, from microfinance. Do you have any feelings, fears, concerns, hopes? Or is that really very far from your... Well, when you sit in Geneva, you're confronted with these private banks all the time, and every 2 weeks I have to make a presentation on, social performance measurement in microfinance. How do you do that? We need that. We need that.
Yeah,
It's for you, it's very esoteric. Okay, fine, then we'll move on to something else.
I think that yesterday there was a presentation, Dina was there, and she explained how are they following. They are an impact investor, and how are they following the performance of the institution? And what I liked is that they don't decide what are the social impacts that an institution has to have. They make them choose from whatever they are doing. If they say X, Y, Z, they say, okay, if you say that your social impact by your doing is going to get to this point, okay, you have to be accountable. And I think, Bernd, that what boils down to is accountability. Because I feel that a lot of us have been keeping our social mission or our statement that we reach the poor we reach the excluded, or we include as a market label. We are not accountable for it. So I think that even investors, donors, bilateral, civil society, they should ask for outcomes. They should know if you are a bank and you couldn't care less about the social component, you couldn't care less about your clients, it's okay with you. You know that you're running a risk, because how is your portfolio going to behave if you don't pay attention to what's happening with your clients? But that's your business. But if you claim that you have a social component and you have a drive in your staff, in your board, in your CEOs and CFOs or whatever, to get somewhere, be accountable. So be accountable to your clients, to your staff, and to your investors.
Now, talking about a complex world, when the commercial banking sector of Indonesia collapsed after the Asian financial crisis in the 1990s, 2,000 rural banks, which are part of the formal financial sector under central bank supervision, 2,000 small, local, so-called rural banks, BPRs, survived. They not only survived, they emerged strengthened, because the demand was shifted now, the demand for savings and credit services shifted now from the collapsed commercial banks to these 2,000 rural banks, 2,400 to be exact. Why was that? Because there were no impact investors. As a matter of fact, the law of 1988 precluded any investments of foreign investments in these rural banks. And that really saved them. And I have a number of other examples, but I know there are other examples. That's why I'm saying the world is complex. Don't generalize what I'm saying here. You have to be very careful with reality and not... I think our world here is divided into two types of personalities, and you can guess what kind of personality I am. There are believers, and they follow what they believe in, and there are others who are, like me, sociologists, who observe the reality, try to interfere, observe what happens, and then shift the emphasis, shift the approach when they find out it doesn't work. Because the problem is the world is very complex. What works in one country doesn't work in the other country. Within the country, there's so much variation. One has to be very careful, and there is no such thing as best practices. That's the worst thing that you can do, best practices. Like the World Bank gives you a recipe, and you apply that across the board. And you train everybody to stick to the best practices. They are good practices.
Yes.
That's what we need.
I subscribe to that, by the way. That was one terminological improvement, I think, that has happened in the early 2000s at SIGAP, when all of a sudden they diluted the superlative best to good practice.
Klaus Maurer achieved that.
After having realized this is a little bit paternalistic. Okay, now,
Best to good.
it's 10:10, so I look at the... Yeah? Okay, I'm sure I would prefer questions, because as you can see, these people here are very opinionated, so you will get strong stuff back. Don't make statements.
We certainly are.
Oh, well, you can make a statement if you like, but I would prefer questions.
Opinionated burn.
Okay, well then that's it. That's the future of microfinance.
They are so shy.
No, there is one.
Maybe there are founders.
No, there's a lady in the back.
No,
They have to figure.
that's a very good question. Maybe they should be saying something.
Can you stand up, please?
No, it's not working.
seems very low. Ah, turned up, okay. I read online that there are 123 million MFI clients worldwide, and that number seems kind of low, and I wondered if that is accurate, that number, and if it is accurate and we're thinking about where next for microfinance, what are the ambitions for being a bit more inclusive, because we talk about the bottom billion and 123 million even allowing for developing country age demographics still seems a little bit low. So what are the growth ambitions in terms of including more people?
Can we take another? I would suggest we take another one on crowdfunding links to, or whatever. I mean, I'm.
Yeah. Founders from in Indonesia. I'm a bit confused about this discussion about MFIs or microfinance institutions, because coming from Indonesia, there are almost no microfinance institutions there. But as Hans Dieter just explained, one of the largest microfinance institutions in the world is a bank, BRI in Indonesia, with $18 billion outstanding. So what I'm also seeing is in China, it's Alibaba that is actually one of the biggest microfinance institutions in the country. And also now in Indonesia, you're finding these motorbike taxi company called Gojek has just received $5 billion in finance to basically grow their motorbike taxi business. But the motorbike taxi drivers are the agents that are converting all the small kiosks around the country to become borrowers, to become part of this ecosystem, this online ecosystem, which is essentially providing microfinance services as well. So I don't think microfinance institutions are really relevant. It's more the methodology or the structure.
Yeah.
It's coming disguised in different clothes.
Yeah. Okay. The question on 123 million on outreach on growth.
123
that's
million.
Million. So your question was, is that a correct number, or is that a number that can be, should we set that as an ambition to double that and triple that number in the next 10 years or so?
Yeah, I mean, as we said, we were practitioners, and we believe that each of us will talk about his own country or own region. And I don't think from here we are able to say that in the next 30 years or 20 years we will reach out to 1 billion or 1 or 200 million people. I believe that's what we were saying this morning, that this is given to CGAP and Action to give you the figures for the world. But all about we are saying here is what we are doing in, and I respond to your question also. It doesn't matter if it's your MFI or a taxi driver or an agent. What are you doing to contribute to people's empowerment through microfinance or through financial inclusion? And I believe that there is space for everybody. I believe that, yes, it's great to innovate and to find ways to reach out to those poor people, even in our countries, where MFIs cannot go because it's very expensive. So that's why I believe that the future will be a mixture of traditional MFIs and fintechs and maybe taxi drivers, agents, I don't know, maybe Alibaba. But what we should really avoid is having Alibaba invading our countries, that fintechs are invading our countries and breaking this beautiful relationship MFIs started with people, with clients. I don't think that the future of microfinance is only or lies only within technology. It would be very, very sad for us if we have relationship only with money on our phone. And we explained this in the beginning. Human touch is very, very important.
And I will add something that worries me about the numbers and inclusion and Alibaba and all the motor taxis or whatever. Is it to have financial inclusion, Ben? Is it to have more people making the banking sector or the financial institutions having more clients, so more business? Or is it to have more clients that are included, fully and sustainable included? Not as it had happened in Peru, that there is a boom of numbers in financially included, because all the money that the government gives to certain kind of population, like a $30 deposit, they deposit into a bank account, so they give them a debit card, and they go and withdraw that money, so they are included. What do we mean as inclusion? So again, I go back to, Asma said, we don't want this Alibaba flowing into our countries. It's not because we don't want them to give service to the people that would need those kind of services. We don't know the outcomes that are going to have, the clients are going to have. We don't know if it's good or not for the client. Alibaba might be doing tons of thousands of dollars as an earning. What's happening to the clients? We have seen in Latin America a lot of institutions going there. There was one, I remember, that it was a Chilean one that went into Bolivia, and they charged such a huge interest rate that they had the luxury to write off 50% of their portfolio, because they were charging such an humongous interest rate, and they went there, they destroyed the market, they disappeared, but they didn't lose a penny because of the interest rate that they were charging. So I think that the outcomes at the level of the financial user is the key component to see how we want to grow, where we want to do, and what methodology we want to use.
I think the answer to your question was a little bit the second question, i.e., the 123 million is a figure from, I suppose, from the Microcredit Summit campaign, i.e. largely reporting MFIs that talk about their clients. But that's the core. If you now look at the broader picture,
these are the reporting institutions, leaving out
that's
all
right.
the
Exactly.
majority of others.
So, it's a little bit more complicated. And if you, for example, take the case of Indonesia, where at least under the name microfinance institutions, you don't have anything, but you have other things, including cooperatively organized financial intermediators that are very important there. If you lump them all in, then you probably get a different. But I mean, we're not talking about no specific figures, but it just could be that if you are interested in driving up the numbers of clients, beneficiaries, or whatever, these various linkages and innovative bridges between different kinds of financial intermediaries and social intermediaries is an answer. And that makes the counting, of course, much more complicated.
Indonesia is a rare case. I mean, you don't have many BRIs in the world. I mean, it's really a case.
And you don't have many governments around in the world that are so ambiguous as far as financial intermediation is concerned. So we better not stay away from models, stay away from best practices. They're
good practices.
Good practice.
Voilà. There is a question all the way in the back.
Thank you. I am Natalia Realpe, director from EDERA. And I will say this might be very provocative in this session, but I guess it's very important given these founders as panelists and here having this audience. Coming from the energy sector and having this type of conferences, I've seen companies very critical towards founders in the same conference asking for lower rates. Why don't you sit in cheaper countries? Why are you why are you in Europe? Why are you in North America, where your costs are much higher, which implies that our credit lines are higher, and you're asking us to have a liquidity and a profitability that it's almost impossible in the regions that we are working. And I'm asking whether this is the case also in the microfinance, or if you have seen such a critical approach from the microfinance institutions towards your services, or asking you, like, please, can you reconsider the rates or conditions that you are giving our products? That's one side. The other one is at the beginning of September at the Convergences Forum in Paris, Mohamed Yunus was there, and incredibly or surprisingly, he, in his 2 or 3 speeches that he had, he didn't mention once the word microfinance. And the one time he mentioned it, he said, I didn't create microfinance to make funders richer. I created to give opportunities to the poor. So what will be your message to Mohamed Yunus, no, the one who has inspired all of us to be here today? And what will be the message for the future, so that this image that we have, making the founders richer and the clients poorer, or in other, in not really like conditions that we are saying that they are having an impact or a change in their lives, what's coming next? Thank you.
So that's an interesting point.
Can you
Microfinance.
First question?
The first question, rephrase it?
No, I didn't get it. No.
I think your first question was on the need for microfinance service institutions.
Whether microfinance institutions have been critical, or do you expect also MFIs at some point to get united and say, like, please just reconsider your credit lines, or let's talk about this model that we are having, as such as it occurs from the energy sector, like in this conference is saying, why are you asking for this profitability when it's almost impossible in the regions that we are working on?
I'm not sure whether it's clear. Are you talking about MFIs ganging up together and trying to renegotiate a credit line from a development finance institution or whatever? Do you have any experience? You work with other resources, right?
I mean,
it's a little bit
MFIs
confusing,
getting together.
Well, let's take the second question, because the second question is
I
easy.
think it's related, because when you said the founders getting very wealthy, I think it's a very good point in terms of who's who, no? And I don't know if a lot of CEOs got very rich or wealthy. No founders. The founders of NGOs, as you know, NGOs can't distribute dividends. So all the money that it's made by a microfinance institution, that it's not for profit, it's an NGO, it goes back into the entity. But I love your question, because one of the things that I saw not only in one institution but several, the moment that the institution became more visible, it had equity, a big equity, all the board of directors and the board of directors, they do become very interested in the institution, and they begin to throw their weight around, and they distort the essence of the institution. So I think that that is something, it has to be taken into account. It's a potential risk, and that's why regulation becomes a very key component of how do you do the business and who gets the benefit. And I am very strong in saying that the benefit should go to the users of the service and not to the owners or founders or CEOs. Absolutely.
Perhaps we can change our view of financial institutions for the next couple of meetings that we're going to have here a little bit. Financial inclusion tends to be a passive concept. Here are institutions that provide services to people. Now, I'm interested in the owners. Now, there are hundreds of millions of people who are owners of their financial institutions, which is most obvious in the case of financial self-help groups. But it's also obvious in the case of cooperatives. It's less obvious, and there's a lot of lack of data for many of you, actually, that there are rural banks, there are small local banks, there are not NGOs, there are microfinance institutions that are really owned by their members as shareholders. Owners, and they are involved in the management, and I think this is a perspective that is getting a bit lost. And I can't remember that it was ever picked up here. Maybe it was over the past 10 years. But my suggestion is to pay more attention to that ownership aspect.
Yeah, in the case of NGOs, I know that it's not the case everywhere. But in our case, the NGO is the major shareholder. And today it has money, and the money is given back to the people. How? Training, because we are not allowed by the government, by regulators, to make people pay for the training or the financial education or whatever, any other non-financial service. So I believe it's fair because the poor people are paying for their own empowerment. Not only they are taking loans, because in our case it's only loans, but they already paid for their services and the services that are given to their children today. So the money that is within the NGO today is given 100% to the people themselves. And I really find this wonderful, because if we were counting on the government to pay for the development of poor people, they won't do it. And I think microfinance, that's also another magic of microfinance, it enabled us to do that. So today we can afford to, offer training, financial education, health education, and name it. And I think you are right that we should be careful about some cases. Yeah, it happened that in some cases founders, bought shares and became rich. It happened. But I don't think it's the case everywhere, especially when we started as NGOs. And I believe that most cases, the founders are people like all of us, and they are just living on their own salaries. If your question about Mohammed Yunus, what should we tell him? It's the same thing, This morning we were saying that things are changing, evolving. Mohammed Yunus is also changing. He is no longer a microfinance person, and he wants to bring new concepts, new ideas
To development.
Why not? I think it's important. It doesn't mean that microfinance is not important for him, because I think, as you said, he did something. He already inspired all of us. What is his name? The guy from Bolivia, Pancho Otero. We were all inspired by those first founders, and more people will be inspired by us, and it doesn't mean that we should keep talking about microfinance in the next 20 or 30 years. So I think Mohammed Yunus is an inspirer, and he's going around the world and bringing new concepts that are very important for the future of human beings.
Okay. Now, it would have been surprising if in a panel animated by founders, the mega founder or the meta founder wouldn't have been mentioned once.
Yes.
Thank you very much for the last question, and then I think, Jimmy, yes, please.
Yes, it's a question just on growth.
Can you stand up, please?
Because we don't
yeah.
Standing.
we don't hear.
Can you hear me now?
Yeah.
Yeah, good. It's a question on growth. So one of the challenges is if you're a cooperative or you have a non-for-profit ownership structure, one of the challenges of financial services and lending in particular is it's very capital intensive. So how do you really get enough capital if you don't get commercial investors into your shareholder base? How are you looking at kind of really growing and scaling to any extent? Because if you don't have commercial investors in your shareholder base, your capital is always going to be limited to essentially whatever your members can provide for you, or it's going to be limited to, essentially whatever you can get going around, to donors essentially with a begging bowl. So how do you think about, growth and scaling in terms of the capital that you need to scale if you don't go to commercial investors? And if you do go to commercial investors, then it opens up all the questions about, getting commercial returns and wanting your incentives as founders to be aligned with the incentives of investors. So investors want to know that if they invest in a business, that the business is going to, if the business does well, the founders do well. And it kind of changes the whole character. So how are you thinking about growth and your capital requirements?
Yeah, I mean, we are a good example of an institution that was an NGO, getting loans from banks and financial institutions. And then we were convinced by consultants and IFC and whoever, CGAP, and that we should transform into a company. And we created a company and we invited investors. And my disappointment, I thought that investors would bring a lot of money, and they're not. They can't. They just can't. They brought some money, equity, and that's it. So today, we have problems growing because we are in a country that is having problems with the currency, and we have a problem of liquidity, and we just cannot fix this problem with investors. So we have to find the solutions in the country with local banks, local whatever. And I agree with you that investors will not fix the problem of microfinance. And one guy at the central bank, and that's why I was criticizing the regulators, told me, why do you want to grow? Why don't you stay as you are? I said, but there is a need, there is a demand. We still have 1,500,000 people who need microfinance, microcredit only. And he said, no, you don't have to grow. So who is going to replace us? And he couldn't answer the question. So I don't think investors or impact investors will solve the problem of growth. We have, at the local level, we have to find solutions.
But I would like to add to what Asma said. I absolutely agree with her. But I think that in order to have investors coming into your institution, the damage that I have seen in the past of the investors changing the rules of what you do is huge. And not only mission drift, that it could be something very used and I don't know, but they begin to rule what you want to do, and then you get lost in the bushes. I think that in order to have investors, you have to have a rule of thumb, what kind of investor you're going to receive in your institution. You have to have very clear rules and be aware of the risks that you could be running. But as you said, there are not many investors that are ready to jump into your institution because of the risks that involves giving services, especially if you give services to the very poor. The big MFIs that have turned into banks, they don't run that problem. But on the other hand, what you said, Asma, about growth, I remember Richard Rosenberg in Boulder telling us that the only way to be sustainable was exponential growth. And he showed us the curve that we should go through in order to be sustainable. Until now, I call him the curva del diablo. That means devil's curve, because I could clearly see when you have an exponential growth, you suffer a lot. there is huge problems over indebtedness. You push the credit officials to do things
Yeah.
that they shouldn't be doing, to give loans to people that they don't qualify for loans. You lose the sight of empowering people to make the decisions. And who's making the decisions for them? The greed of the institution to grow. And we have seen problems so the balance between staying small and giving good services and performing in the best way to grow, but in a very sustainable and wise way.
Hans, very briefly.
Well, a big challenge for many people is to find a safe place for their savings. A safe place for their savings means savings being safe from your relatives, from your friends, from your husband or wife, from your children and their daily needs. Because if you respond to them, and it's very frequently impossible not to respond to that, then comes the time where you have to pay school fees, where you have to invest in agriculture, buy seeds and fertilizer, invest in a trade or some other enterprises. For that, we need institutions that accept savings. The unfortunate thing is that the microcredit world has gone in a different direction with the support of donors and investors. And these we've also seen in recent years that there has been a change, that many of these institutions, the regulation has changed. Many of the institutions now are open to deposits, but the art of taking deposits, spreading the word that these institutions take deposits, that's a different story. This classical world of microcredit or microfinance is still stuck in a situation where they are not mobilizing their own resources, they are not self-reliant. And that is one of the great challenges, actually, to turn that world around. To create safe places for the savings of people, that is the point here. And on that basis, of course, grow and have access to credit.
Well,
Yeah.
so I will not try to synthesize the whole thing as we went all over the place, but I also admit that we did not go into a number of issues with the perhaps required depth. We just touched upon that, including government interference and government intervention, including governance in general, including gender. So a lot of things we didn't talk about. So just a little word from Winston Churchill. Guess which one? Success is not final. Failure is not fatal. Never, never, never give up.
Yes.
Yes.